Good morning, America. Good afternoon from Germany. Today is Thursday. We have January 5th, and we are waiting for some employment data today. So let's have a look at the news from yesterday. I will show you my screen first today, so I won't miss it like yesterday. No, we won't start with Netflix. We will start with the economic calendar here from yesterday. And there we had, we were looking during the live stream at the Jobless job openings and ISM manufacturing PMI. One was almost in line. The other one was a little bit higher than expected. The market dropped a little bit, but could hold and went back to 11,000. We'll look right at the charts. And then we had that 2 p.m. Eastern FOMC meeting minutes. These meeting minutes came in a little bit more hawkish than I expected. I expected them to be dovish, but they were completely different. But the market just went sideways. We will just go on a higher time frame to see this yesterday. As you can see here on the market opening, we went down with the news. We went back to pre-market highs around 11,050. Therefore, it was important to have this line here. We could manage to go a little bit higher, but then we suddenly dropped back, especially here at my time 8 p.m. This is 2 p.m. Eastern. When the Fed meeting minutes came out, we had a lot of volatility. As you can see, we went down back to 10,900 points. This supporting area, and you now see again why this supporting area is so important. And again here, even on a 50-minute chart, you can clearly see we went to lower lows, but went back in this supporting area, and therefore never set your stop loss too near. You see the lows of the day before yesterday. We see the lows here at 10,850. So don't set your stop loss too near below this supporting area. So this supporting area hold a second time and a third time right before the closing, and then we went back up again here and closed at 10,996 at the 11,000 level. That's the point where we are right now. So it's just more of a sideways trading, but in about 10 minutes we will have more data. Yeah, that's it here. So the Fed meeting minutes told us that the board is not expecting that we will see a drop in interest rates in this year, but maybe they are wrong. Because when we look at the Fed dots we did yesterday, then you see that they are expecting lower interest rate levels, and therefore I think that we will see lower interest rates at the end of this year, even if we will still have 2 interest rate hikes this year. Next one on February 1st. So let's have a look on CME Fed Watch tool, because here we see the shift of expectations now. Yesterday we had about 70% expectation for the 25 basis points rate hike. Today it's only 63%, so 7 percentage points lower. That's because of the hawkish Fed minutes, and therefore there is a higher expectation now for the 50 basis points. It's still about 2/3 for the 25 basis points, but there was a small shift of 7 percentage points from the 25 basis points to the 50 basis points. Yeah, that's it from the news from yesterday. Let's have a look at today. Today is in about 8 minutes ADP non-farm employment change. This will give us an outlook for the numbers tomorrow for non-farm payrolls, like every Friday, like every first Friday in the month. And we will have initial jobless claims in about 23 minutes, like every week. So this is not really important in my eyes, because it's a weekly number, even if it's a 3-star event. But more important will be ADP non-farm employment change, because this will give an outlook for tomorrow, and tomorrow will be really important. 1 hour before the market opens, non-farm payrolls, because this is a monthly number. And again, we will see if the job market is still strong or if it will weaken, and this is what Federal Reserve wants to see, a weaker job market. We had some layoffs yesterday, the announcement of layoffs from Amazon. I think it was 18,000 or something like this and in layoffs. So this was a good news, and the market went straight back up. So a lot of volatility yesterday, as you can see, but still sideways trading, so a lot of indecision here, and we are still waiting for the breakout to the up or to the downside. As you can see here, just more sideways trading, still below moving averages. We have to wait for the break of 11,250. This is my important level where I think we need to go above to be above the moving averages of 9 EMA and 20 EMA line. And if we break to the downside, the important level is 10,750 points for Nasdaq March future. Okay, let's move on with single stocks. Let's begin with the strong stocks. We talked about Netflix yesterday, and it was really strong yesterday because Netflix went higher for about 4.7%. It's really good, or 4.8%. And yeah, my option position, my 235 strike put, was almost bought back. I'm just waiting for some cents. It closed at $1.40 and my buyback price is $1.05, so only 35 cents left. And yeah, let's see if we can have the buyback today with Theta Decay. Theta Decay is now 18 cents per day, so 1 or 1.5 day at the same price level, and I will have the buyback. You can see the closing price was yeah, nice, because here you can see this was previous low levels and we had the Fibonacci level here, but it was a strong push above previous highs and above 50% Fibonacci level, and therefore an interesting chart here, and shows again the strength of Netflix. Then to Tesla. In Tesla we see more sideways trading. We were strong yesterday, but this was a little bit less strong than Netflix. 5.7%, yeah, not bad for Tesla, but you see that we went down for several weeks now, and we are still in a sideways trading phase now here between $104 and on the upper side $125. So we need to have a breakout here to the upside or to the downside to see more clear direction. I want to enter if we see a false breakout to the downside, maybe to the 100 level. I will try to sell a put here, 80 or 75 strike put, depends on when we reach these level. I know it's a little bit a risky trade, but yeah, and we will have the earnings on January 25th, but I want to be out of this trade before the earnings. Therefore, I will close it at the latest 1 day before the earnings are out, because I don't want to hold a position over the earnings. Yeah, my target won't be 80% here, what is my normal target for option positions, but here I will maybe take 30 or 50% profit if it fits in my plan here to enter right at the $100 level. Let's see what happens here with Tesla. To the futures, commodities, still weak for sugar. I won't trade it to the long side. Yes, you can if we reach the 19 cents level here, but we still have some room to the downside, but I won't trade it to the long side. I will just wait, and I want to trade the break here below the 19 cents level, and then I can short it again, because here I will have more room, about 7.5% to the downside to the previous lows here, and this is interesting to trade the breakout and not a reversal or just yeah, this small trade here with 1.6%. It's not interesting for me to trade this, because I would trade against the main trend here, and it's considered to be risky. The same like with natural gas. Here I'm trading against the trend, and you see how difficult it is. We had a green day yesterday, but today we are in the red again, minus 5.7% for natural gas today, retesting the $4 level. Right now we are at $3.93, so retesting the lows here. Let's see if they can hold or if we finally break below. I still have my $3.70 short put options position. It's in the red for 60% since the opening right now, so $900 in the red. Yeah, if it reaches minus 100%, I will close it, or if we reach the strike price of $3.70, I will close it and roll it out on a later expiry and strangle it. So I will sell a call and a put, and therefore I can have a little bit more room to the current price level. Yeah, but my Netflix position is working really good because I'm in the green 73%, and therefore my losses in natural gas are almost fixed with this Netflix trade. Let's go to crude oil. Where's my crude oil chart? Here. Crude oil was really bearish, and we talked about this important level, the previous lows. We went even a little bit lower, as you can see, but today we are going higher. We talked about going long here. Yes, it's against the trend, but you see we had a huge sell-off, 2 days of huge sell-off, and normally we see a recovery here, and that's what we see right now, a smaller recovery. This could be 2.5%, or if we go to this Fibonacci level, 4.5% recovery. Let's see what happens here. I'm not trading it, but it is interesting if you were in a short trade to close it out here at the previous lows, or to wait for a better entry point if you want to reshort it here at this important level. $76.50 or $77, this could be an important level here to re-enter a short trade. Like always, no investment advice, it's just for entertainment purposes. Do your own due diligence. I just tell you what I'm seeing here on a technical analysis base and what I'm trading. What else do I have here? VIX, let's have a look at VIX. So you see we went down after all the news in the previous 2 days. So we are at the 22 level right now. So not a lot of fear. Again, even if we have some employment data in 1 minute. So let's go back to Nasdaq chart and see if we can see a movement here. We have 45 seconds left until the news are out. Let's just bring the news in front here so we can see the news right away for today, and then see if we have some movement with ADP non-farm employment change. So what the market wants to see is not a lot of employment. We want to have less employment. The expectancy is 150k forecast, and we want to have a lower than expected number, and then the market should go a little bit higher. So we want to have worse than expected numbers, less inflation risk, but not too slow numbers, because then we will have recession fears. Oof, a lot higher than expected. Not really good for the market. This should tank now. This is a lot higher than expected. Okay, a lot higher. Went down 60 points right away. Let's see if we can hold the lows or if we will go lower. Numbers are not really good, but the market can do everything like always. Non-farm payrolls tomorrow are a little bit more important than the ADP numbers. But yeah, like I said, it's like an outlook for the numbers of tomorrow. And if these numbers are now higher than expected, then probably we will see the same tomorrow. Therefore, probably we will retest the lows here. Let's see, previous lows, pre-market lows here at 10,931 points. Same here, but we had lower lows yesterday, so probably we'll retest the low area here, maybe. Let's see, we have more news to come in about 15 minutes. The weekly initial jobless claims numbers can change everything, but as I told you, I think these numbers are not so important because it's a weekly number, and still low volume because market is not opened yet. Seven people watching need 7 likes. Yeah, please give some likes for the stream here. Would appreciate it. Yeah, some likes please, and then we can go on. Okay, SU possible inverse head and shoulders earnings. Okay, we will have a look at this stock. Just give me a second to bring it up. So Nasdaq is holding the levels right now, pretty strong for the bad news. So let's see the stocks you mentioned. Suncor Energy. See it on a day chart. And just deactivate outside of regular trading hours so that we can see all the gaps. We have lows here. We had the retest of the lows and the third time the retest here. So this level should hold. And if not, it's not a good sign. And you see an inverse shoulder head shoulder. Maybe on a higher time frame. Let's see on a week chart. Yeah, this is the high point and or the inverse. So you mean this is the head and these are the shoulders here? Yeah, not really local high points or low points. I wouldn't say this, no. Yeah, it's in a downtrend, of course, because we had lower highs here. But the interesting thing is we had a higher high here. So this is normally indicating an uptrend here. But now we need to hold these levels here. This could be a false breakout we had here on one day. Then we went back right away. So we have to hold these levels above 20. Let's say 29. It's easier because we had lows here. So we should close above 29 today. Then it's still okay. But then we would aim for higher highs here. So we need to go above $37 to go here with this uptrend. And yeah, it's low volatility right now. You said earnings on February 8th. Okay, there's still some time, 1 month. So a lot can happen until the earnings. Yeah, it's not bad if you want to take on a long trade and just set your stop loss here at 26 or 27, whatever you want, because you have a lot room to the upside if you just want to target here the high points, $35, $37, or if you want to trade it for a breakout, whatever. Depends on your time frame you are trading it. It's an interesting stock because I like the sector. For the solar sector, is it really interesting for this year? I think because a lot of money is spent here in the sector right now, and therefore these stocks are rallying. As you can see, since 2 years now, we have higher prices. Yeah, I think that Biden will push more money, more government money into this sector, and therefore these stocks will hold their levels or go higher. The 30 strike calls. Okay, 30 strike is at the money. I wouldn't trade at the money calls because they are really expensive. You pay a lot of extrinsic value because we are at the money here. And yeah, these are not cheap. I would always trade out of the money. So I would take a $35 or $37 depending on which time frame you trade. Let's just see this and see SU options. I have never traded SU as option. I don't know if they are really liquid, so let's just see this. So normally I would trade 60 to 80 days, so minimum February, better March. It's behind the earnings, but you have more time and less time decay, so less theta decay. So 30 strike you see is $2 here, and expiry you chose the January 20th. Yeah, you could, but then you have only 90 cents in payment. Yeah, it's not really expensive, but you need a lot of movement here just to fill up the theta decay. As you can see here, you will lose about 3-4% a day, 3 cents a day, if nothing happens. And that's why I don't trade these near expiries. I normally trade longer time frames like March. This would be ideal for me. 60 to 80 days until expiry. March is more interesting, and then I would go out of the money. So like a 30 delta or 35 delta. So something like this here, 33, 32. This could be more interesting. You would pay about the same money, a little bit more maybe, with a 33 strike. But you have more time. You have less theta decay. As you can see, only 1.4 cents a day. So only a third, and you would still make money if we go higher, and therefore I would trade here March expiry with a higher strike level. But of course, if you are trading intraday or on low time frames, then it's interesting to trade near the money or at the money, and an expiry which is not far away, like these 2-week expiry here with general trend weeks. So you consider breakout trades to be less risky than other trades. Yeah, because it's not against the trend, Penguin. So it was when I was talking about sugar. So let's go back to sugar. Of course, a breakout trade is less risky because you would trade with the trend. Because here the trend is downwards, as you can see. And if you look at the... We can have a look at Finviz, then you will see it. I can show you the commitment of traders data, and you will see that for sugar here we see that the commercial traders are really short. So let's see this on a weekly time frame, then you will see how short commercial traders are, and the commercial traders have more knowledge than we small traders have. So these are the producers, they know a lot about the commodity, and if they are short, they are willing to sell their sugar because they think it's a high price. And that's interesting to know, because I want to be on their side because they have a lot of knowledge about this commodity. And if they are short, you see here, they were really short, and yeah, then we had high point here and went lower. So they went out of their short positions a little bit here, and then they again shorted because we had high price levels, and again now we have a higher price level here, and they are really short right now. So it's interesting to be on the side of the commercials, and you always want to be short when they are short, because here you see the low point here when they were really short was the high point here of the sugar prices back in 2016, and then the prices dropped heavy. The difficult thing is you never know when the prices are really high, because here you see we had the previous low here of commercials. They were selling really heavy, they had short positions, and sugar prices dropped. But then in 2016 they rallied more, and commercials went even more short, so they sold even more sugar. So it's interesting to trade with the commercials, but it's not a thing you can say, yeah, this will happen tomorrow. So it can take several weeks or months until we will reach the top point, and then the trend will turn. And that's the point here. The commercials are really short, so probably we will see a high point here, but we don't know yet if this was the high point or not. And this is what I want to trade, a breakout on the side of the commercials. And here you see the establishing short trend here, and this is what I want to trade for the breakout here, because then we clearly see that we are making lower lows and we are not in an uptrend here anymore, and this is what I want to trade. The risk of a trade is always defined by your stop loss. So by your money you put in a trade and how far your stop loss is away. So of course I could trade to the long side here, and I could just scalp it and say, okay, I will enter here at the 0.19, so 19 cents level, because I think this is a bottom here, and we will hold it the first time and then go 1 or 2 days to the upside, and I can take these 1.5 or 1.6%. Of course I can do this. If I have a really near stop loss level, why not? Could be interesting. But I rather want to trade, be longer in a trade, in a swing trade, and trade for more movement here, like 7.5% movement, but within 1 or 2 weeks. This is more interesting for me than just taking this small position and trading against the main trend, as you can see here, because it's risky. Like with natural gas, if you trade against the trend, then you can be caught on the wrong side. I thought here that we will hold this level and go back to 450, but the natural gas is really weak at the moment. It's like with Tesla. You never know if the 100 level will hold or not. And that's the risky thing about trading. Sometimes you have to give it time or more room. And if you are trading with a high amount of money, then you don't want to place your stop loss far away. So therefore, I want to trade with less money, smaller trade amount, but my stop loss is not too near, so I can give it more room to breath, and then we can see probably here the downfall here, or more after the breakout to the downside, more movement to the downside. That's what I want to see here in sugar. Okay, back to Nasdaq. We have in 3 minutes the news. The lows here at 10,950 are holding right now, but we are still in a downtrend, below parabolic SAR, below moving averages, below VWAP. As you can see, we had some volume here, but still low volume. It's still pre-market. I agree with direction, just always trying to get into direction trades during pullbacks, and feel breakouts can be more risky, but then I miss many trades. Yeah, it depends. It depends on what your trading style is, but the risk is not defined by the chart. It's defined by your stop loss and by the amount of money you place into a trade. So you can do a risky trade with a low chance of probability, but if you just place small amount of money, or if you have a stop loss really near to the current price level, then it's not really risky for your portfolio overall, even if the probability is not really high. So you can decide how much money you place in a trade and where you set your stop loss, and this defines the risk, how risky a trade is. Okay, let's see. The initial jobless claims, we have expectancies of 225k like last week. The previous weeks, let's see the number for the previous weeks. We were often in line or a little bit higher than expected. Not higher than expected, lower than expected. So less initial jobless claims. And therefore we can see the same today. But yeah, we can always have the inverse and see higher initial jobless claims. This would be good for the market. Let's see if we can have, for the first time since 1, 2, 3, 4, 5, for 6 weeks, the first times that we have higher than expected numbers. Would be not too bad for tomorrow for non-farm payrolls. But as always, don't trade the news, just trade direction. The trend is your friend, nothing else. 20 seconds left. Ten seconds. News are out. Ooh, more to the downside. Ooh, this was fast. Trade balance is not as low as expected. That's good for the US. Good for the dollar. What about initial jobless claims? Come on, give us the numbers. Still not showing up. Almost in line, probably. Not moving a lot. Maybe a little bit lower than expected. Let's see, Euro USD. Should also affect Euro USD here. Yeah, US dollar is getting stronger, Euro is weakening because labor market is strong, and this causes more risk of higher interest rates, as always. Question from Ron: what delta you normally choose when you want to buy and sell options? Yeah, it differs. So when I want to buy options, it's really rare that I buy options, but when I buy options, I normally choose 30 to 35 delta, because I don't want to overpay and I want to have low implied volatility or low IVR, so not paying too high extrinsic value for an option. Therefore, I normally choose 60 to 80 days until expiry and 30 to 35 delta. And yeah, that's more interesting. Or if I choose a near to expiry or at the money option, I normally trade debit spreads. So I sell a call, I buy a call and I sell a higher strike call, or I buy a put and I sell a lower strike put, so I don't have to pay a lot of premium. But I really rarely trade these styles. Normally I trade just to the short side. I sell options, an option seller, and there I sell delta 16 puts or delta 16 calls. When I trade future options, I normally trade delta 10, but with stock options I trade delta 16. So import export, a little bit lower export, yeah, because of the still high dollar. Imports also lower, maybe showing a little bit of a recession risk here. Initial jobless claims, why don't we have this number here? Come on, give me the number here. 204, yeah, a lot lower than expected. A lot lower than expected. Yeah, that's not good for the market. Labor market is strong. That's not what Jerome Powell and Federal Reserve wants to see. And 204K is a too strong number for the market. Yeah, we will see what happens when the market opens, but we will probably retest the lows here from yesterday, I think. And yeah, maybe this time we will go lower and retest the lows of the week. You see, 1 time, 2 times, 3 times. Will be difficult today. Will be an interesting day, but it's weak. Numbers are too good for the market. Labor market is too strong right now. What other stocks do you have? Just let me know your ticker symbols, then we can have a look at them. We talked about Meta yesterday, so let's have a look at Meta today. Also a little bit lower than yesterday, but still green. Implied volatility is rising right now. Let's see when Meta has earnings. Earnings season will begin in about 2 or 3 weeks, so we will have more tech earnings again. Let's see here. I always look up the earnings on Earnings Whispers. There you can enter your ticker symbol, Meta. Oh, sorry, Meta. And then you see next earnings February 1st, but you see here the sign, it's not confirmed yet, so we have to wait. It can be in January, it can be in the 2nd week of February, so not confirmed yet. But if you look up Tesla, then this one is confirmed for January 25th. And you can go to a calendar here, so you will have the earnings of the week, before market open, BMO, and after market close. So today after market close, you see here the companies which have earnings, but nothing important because earnings season has not really started yet. So we have to wait for the big ones. Yeah, maybe Tilray, but it's not a big one, next week. And yeah, there will be more earnings at the end of January, beginning February, when the earnings season is really starting, and we have more confirmations of other earnings dates. Okay, back to Nasdaq. We tested here the supporting level, pulling back. Market is still strong in my eyes right now, but yeah, when the market opens, we probably will see lower levels here and a retest of the lows of yesterday, because numbers were not really good. I don't see why dip buyers should step in right now. They had the chance to buy pre-market or yesterday at the same levels, and therefore, yeah, it's a little bit more fear now to the downside here below the moving averages, and the same on a 1 hour and 4 hour time frame, because here you also see that's just sideways trading. It's not really interesting to trade in this sideways trading phase. We want to see a clear breakout to the up or downside to have more room to make money and not to be stuck in this sideways trading phase here. Yeah, back to crude oil. We can have a look at crude oil again. Crude oil was moving up. Let's see on a lower time frame here, like 5 minutes. We went up to highs of $74.92 today. Now pulling back a little bit. This should be a support level here around $74. And yeah, you could still trade against the trend if you think that we are going to higher levels here. I think there is a chance that we will see $76.50, $77, this area here around the 50% Fibonacci level again. But yeah, you should take into account that you are trading against the trend, because the overall trend is still short. So trading short is more interesting, and I would wait for the price to come here and then short it again. This is more interesting in my opinion than going long here. Even if the risk reward ratio can be the same, I think that the chances and the probabilities are better for shorting and waiting for this level here to come. But I have no trade open here in crude oil right now. FTSE, yes, of course. We can have a look at FTSE, of course. I will just bring it up. Where's the future here? Future. March. So this is the FTSE future, and you see it's pretty strong compared to Nasdaq, and in an uptrend here. But we are trying to go above the high points of December 1st, so we didn't manage to go higher than this level here. So this should be resistance level here in this area, or resistance area, because we had the high point here, we had the closing here, but the opening was here. So we already hit this level here of the resistance area, but there will be more resistance in this zone here, and we have to go above the previous highs here of December 1st to see higher levels, and else we will probably see a pullback here at this resistance level. That's it for FTSE. It's looking a little bit like the German DAX. Where do I have German DAX here? German DAX is looking about the same, but we had here a little bit higher levels during November and December. High points were just holding, and then we had the pullback here on December 15th, and now we are trying to go back at the 14,600 points area. And as long as we have not pulled above this level, it's not really bullish. But yeah, sometimes you just have to wait and give it some time, and then we can see the break above this level, or the pullback here at the resistance level. 14,600 is a resistance level, and when we hit it, we will probably see a smaller pullback at this area. Yeah, that's it. So nothing interesting for now pre-market, but I wish you the best for the trading day today. So don't step into a trade too early or with a too high volume if you cannot stand it. If you have a stop loss far away, or even trading without any stop loss, always have a plan what you are doing when the trade goes wrong. So have a stop loss in place, or have something in mind you want to do when it's not going like you considered it to do. Then yeah, go out, accept the loss, and wait for a new trade opportunity to come, because yeah, there is a chance every day. Like Castellani said, don't run after a streetcar, just wait for the next one. It's the same at the stock market. Never run after a chance, but always don't stay in a trade which is going against you, because you will lose a lot of money. Always have a plan where you want to enter and where you want to exit. Therefore, have your levels, draw your lines, and then you are prepared. Thank you for watching, and if you haven't subscribed yet, then please subscribe to my channel and be ready when I live stream again tomorrow. Non-farm payrolls. This time it will be really important, 1 hour before the market open, and we will see us again tomorrow. Goodbye, have a nice trade.